I'd like to touch on something we call scrapping. Tax office doesn't call this. We call this because it's an easy word for you to understand it, I suppose, and for us to understand it. What it relates to is the removal and disposal of depreciable assets in a property that you throw away or scrap. You throw things away. So if you're this is largely for renovators. So if you're a renovator, call us first before you throw all this stuff away. Why? Because it still had some value. You might throw away carpet that wasn't necessarily that old, but you decide you want to renovate the whole house. You put a new kitchen in. You don't leave the 5-year-old stove. You generally put a new one in, don't you? Or the 10-year-old stove. You generally put a new one in, so you make it all nice. You throw away some stuff that had some value left in your tax depreciation, basically. Call us before you rip it apart so we can see the stuff and put some value on it so you can claim depreciation while you've got it, but also when you throw it away, you're throwing away the rest of the value. It's an instant deduction the year that you throw it away or scrap it. Okay, we get that. It's sometimes I'm a very keen investor. I've got a number of properties. I've done a number of renovations. I love it when I can scrap a bunch. Well, I like to be able to scrap a bunch of stuff because I get a good hit of deduction the year I do the renovation when I've outlaid the money. Come back to a dishwasher for a moment. Remember I said a while ago that the dishwasher, they say, has a 10-year effective life. Did a renovation about probably 6 years ago now, I think. Me and my brother, 2 houses, not far from each other. We both actually did kitchens, bathrooms, and we both bought a new dishwasher as part of that part of that renovation. The dishwasher had a 5-year warranty, a 10-year effective life. 5 years and 4 weeks, it broke down. Of course. 5 years and 6 weeks, my brother's dishwasher broke down, both unrepairable. Had to throw them away and buy new dishwashers. He rang me and said his dishwasher broke down. I said, mine broke down 3 weeks ago. Pretty annoyed with the dishwasher. The moral of that story, though, is I threw a dishwasher away that still had nearly 5 years of an effective life left because the tax office told me I could claim it over 10 years. So I'm still annoyed about the dishwasher, but at least I got to claim the rest of that in that year. Fact is, I had to buy a new dishwasher. I start depreciating the new one, but I scrapped the old one. I scrapped it because it broke down. But you can scrap it because you're a renovator, not because it breaks down. If I didn't like the dishwasher in 5 years, I could have thrown it away and bought a new one. Didn't want to do that. But sometimes you don't like the plant and equipment and the things in the property that you throw away that still have value. Call the quantity surveyor first so we can see the stuff and put some value on it and you can write it off if you're a renovator. How do we get the most out of it? More dishwashery type things or plant and equipment items means more deductions in the early years. The more things I can find at 20% instead of 2.5%, the better. We need to do what we can do, not what we can't do. The ATO makes changes to the legislation. We keep abreast of that. We know all the rules. We'll make the schedule to the rules. We'll claim everything we can based on what the ATO allows us to do, get as much as we can out of it. The way we cost it for the purpose of depreciation. If you actually get all the costs from the builder, we'll take some of those we need to use those and we'll take them into account definitely in the whole lot of the schedule. But the way we treat our hot water service for the purpose of depreciation is a bit different to when the builder goes down to Ream, buys the hot water service, brings it back, puts it in, plumber sorts it out, blah, 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 adds electricity to it or gas, whatever it is, so that when you buy the property, the tenant moves in, they have a hot shower on the first night, not wait for you to do all that stuff, right? You pay a premium for that. You depreciate kind of based on that premium. So when the builder gives you some costs, we use those, definitely. We use it for the structure, but with the plant and equipment, it's a little bit different. That's why sometimes the dishwasher, you go $1,350, Brad, I think you can buy one a little bit cheaper than that, which you can, but you've got to install it and do all this other stuff before you can use it to wash your dishes. You depreciate kind of based on that premium. Furniture packs. Furnished property is not always the right thing. I've got furnished property, but it's in a place where it works and it's good for tenants and things like that. But furniture is something that is depreciable. It's plant and equipment. You claim it fairly quickly. So if it's furnished, you're going to get more depreciation. So tell us if it's furnished. If you look at properties that are furnished or not furnished, there's going to be more depreciation than the furnished one. Look, furniture is not always the way. Don't buy furniture to get more depreciation because you're still going to pay for it. But if it is furnished, you'll get more depreciation out of the property. Sorry, strata in common areas. Most of the time you own part of that lift, for example, if you buy in a strata complex. Lift's an expensive item. You only own your little piece of it, but it's an expensive item. You own your piece of it. You can get to depreciate your piece of it. It's also a planned equipment item, so you get to claim it pretty quickly. You also own part of that underground car park. Now, it's a building allowance, 2.5% item, but it's an expensive one. So you only own your piece of it still, but it all adds up. So you want to make sure, obviously, that and we'll always assess the common areas when we're there. What's involved in doing it? What do you do? What do I do? What you do is call us, no matter how old the property is, and say, thinking about getting a depreciation schedule, my carpet isn't from 1927, etc. We go, yes, it's worth doing the depreciation schedule. Let's get it underway. From there, we call the property manager. So we want to make this process nice and easy for you. We're going to need the address of your property, who is your property manager, and a few things like that. After that, we do the work. We'll call the council or whoever it is and talk to you about how old is this building and find all that information out. If you've got plans, good. If you don't worry, because we then do a site inspection. We go out and measure up how much bricks, how much steel, how much concrete, how much carpet. Is the carpet from 1927? And we identify the construction cost of the building, the items in the building, and how much they cost to prepare the depreciation schedule. Now, that inspection is done always by a staff member of mine. Don't have any contractors involved in this process. They all work for me all the time, wherever you are nationally. That's why I've got 165 of people. They're going around inspecting your properties, run around their little BMT cars and go and do these inspections and meet your tenants and do that. We want to make that process easy. We talk to the tenant. For you, look, please call the property manager or email them and say BMT is going to call and come through the property, so they don't think we're some random trying to come through the house and see stuff. But we do the inspection of the property. From there, prepare the report. We go back, we estimate up, prepare the report. After that, save you thousands of dollars is the plan. Things that should be included, that are included in a depreciation schedule done properly. A little bit of the technical bits here. Obviously, the total cost for the items. We need to tell you how much they cost. That's where our expertise comes in. The building, etc. The rates that are applicable to everything, so you know how much to claim each year. We also put in there what that tax officer's effective life is. If it's 10 years and your dishwasher breaks down in 5 years and 3 weeks, you know that it's how much is left and you can claim the balance based on that depreciation report. It's projected for 40 years, so as much as I like you, you never have to come and see me again. Unless, of course, you change things. Now, it tells you on each thing, on each of the items in there, how much you've claimed, and you can, if you do change little things, sometimes your account will update it. You can talk to us, we'll update it very easily. But other than changes or major changes, you can use the report for the life of the property. You don't have to come back each year and do it again. Now, there's diminishing value prime cost and also a pooling schedule. They're different methods by which we claim depreciation. Read about those, because I need another half an hour to explain how they work. Maybe not half an hour, I need too much time to explain how they work. Why I put them there is we give you all of them so your accountant can look at your financial situation, decide which one is the best for you to claim. Diminishing value gets more up front. Sometimes people don't want up front. I do want up front because I want money now, not tomorrow. And I'm even an X, not a Y generation. But we give you everything, your accountant will look at what's best for you. We split the reports up. So what that means is, if you own a property with somebody else, you know, half with your wife and husband, you know, 3 people own a third of it each, you know, 3 mates, 10 mates, 6 mates, whatever it is. The depreciation you claim as a 20% owner of that property is not necessarily always 20% of the total on our schedule. Because of some of the rules like pooling, for example, you might get more than the 20% of the total if you split the report up properly. So tell us if there's multiple owners so we can split it up for you. I'm in the business of maximising the deduction for you, and that will help it to maximise the deduction. We send it to you in a PDF. We also send a copy to your accountant so he's got one before you get there, so he's not entering a bunch of numbers. We also, in the last couple of years, spent a lot of time negotiating with a couple of the providers of accounting software so that we could provide it in a format called CSV. We had to get them to do some programming, and we do some programming, and provide in a format that they should be able to hit the file and it downloads straight into their system, so it's really easy, save them some time, hence you some money because you pay them usually by the hour. So it comes in all those formats really easily. Education is probably the key for making sure you claim it properly. Use the estimates, the calculator, talk to us about your properties, crunch your numbers before you buy. And you can, because the numbers should be available in some sort of a format. The latest Maverick newsletter on your desk there, on your chairs, sorry, not at school here, are we? On your chairs, there's something there you can fill out and join the Maverick newsletter. Now, the latest one of those comes out twice a year. The latest one has an article on capital gains tax and how depreciation affects capital gains tax. Always, pretty much, if someone knows a bit about it, they'll ask me about, but what about capital gains tax? Read that article, because that's another 20 minutes of how to explain how that works. You read it, work it out, and you'll see that claiming it is still beneficial. That's the latest one. We write things about, like that, capital gains tax or whatever it is and how it affects it. A couple of times a year it comes out, so join it. There's an investor section on the webpage. There's actually scenarios on there of what happens to me as an investor, like we've run through today. So you can, I can give you these slides, I'm happy to, but on there's one that actually kind of explains it as well, rather than just the numbers. So if you sort of forget how it works again and you're not sure, you want to see a different example, you can go there and find that. Now we're embracing the social media revolution at BMT, so we can keep you up to date regularly on things that are going on. I think this weekend, if you like it, there's a chance to win a prize, which I think is a mini iPad. So if you get on there and like and guess depreciation on how much it is for a particular property that's got a photo there, bit of fun, and you might win something out of that. I hope you've all learned heaps about depreciation and how to use that in your investing. All I can say is really what you need to do is get a bit of education around that. You don't need to know how it's all done. What you need to know is, I need to know some numbers before I buy the property. I can get the numbers and it's really easy. And of course, we'd love to do depreciation schedule for you after you do buy the property and help you save that money. We're situated all around the country. One of the regular questions probably will be, Brad, I've got a property in, let's say it's Tamworth, for example. We go to somewhere like Tamworth fairly regularly. So if you're in a distance area, we'll still charge you the same fee. But in Tamworth, I still like my own guys to do the inspections. So we'll say, look, in Tamworth, we go there every whatever it is. 2 weeks or 4 weeks, I'm not sure. Different areas will be different amount of time. We were there 2 weeks ago. We go about every 4 weeks. We should be back there in 2 weeks. Is that okay? Generally, it's not that, the complete rush there. From there, we do the inspection, we do the report, and it's a 7 working days to do that report after that in maximum. We're at a stand that doesn't seem to have a number on it for some reason, but is directly straight through there. I would love to talk to you about your own properties for some of the day. Anthony and Irene are there on the stand with me and we'll be able to answer many questions. Doesn't have to be just today, do it later. Ask questions, find out. Hope you learned heaps. Thank you.
Folks, no one knows property appreciation quite like Brad Beer and the BNT team, so I do encourage you to take his advice. Speak to the team today. They're over at stand 323. It's just over this way, right? Yeah? Excellent. It is always surprising how many investors don't have a depreciation schedule set up, and it really can mean thousands of dollars. So thanks for that, Brad.